Bitcoin's Christmas pattern 5 years of data says I analyzed 5 years of Bitcoin price data during the Christmas period, December 25th through January 1st, every single year from 2020 to 2024. And what I found will change how you think about holding Bitcoin through the holidays. In 4 out of 5 years, Bitcoin dumped during Christmas week. That's an 8% dump rate. The average drop minus 4.8%. But here's the twist. 1 year completely broke the pattern. 2020 Bitcoin pumped plus 17.6% during that Christmas period. So what makes the Christmas dump happen? And when does the pattern break? We're about to find out. Quick disclaimer. This is purely educational content. Always do your own research. Never invest money you can't afford to lose. Alright, let's break down the data. The data. I pulled exact prices for Bitcoin on December 25th and January 1st for the last 5 years, 2024 through 2020. Here's what happened. 2024, December 25th, Bitcoin was trading at $99,299. January 1st, 2025, $93,429, down for 5.9%. Dump 2023, December 25th, $43,613. January 1st, 2024, $42,265, down 3.1%. Dump 2022. This was right after the FTX collapse, bear market bottom, December 25th, $16,829, January 1st, $16,548, down 1.7%. Even at the bottom, Christmas dump, 2021. This is the big one. Bitcoin had just hit its all-time high of $69,000 back in November. December 25th, $50,645. January 1st, $46,306, down 8.6%. The biggest Christmas dump in the dataset. So far, we have 4 straight years of Christmas dumps. But then 2020, the exception, December 25th, 2020, Bitcoin was at $24,665, January 1st, 2021, $29,002, up 17.6%, a massive pump. So what made 2020 different? Two things. First, Bitcoin was breaking out. It had just cost $20,000 for the first time ever on December 16th. New all-time highs. Bull market momentum. Second, institutional adoption was exploding. MicroStrategy had just bought billions of dollars of Bitcoin. PayPal launched crypto trading. COVID stimulus money was flooding into risk assets. Everyone was buying. So in 2020, the bull market momentum completely overpowered the Christmas selling pressure. But every other year, dump. Why it happens? So why does the Christmas dump happen? Four main reasons. Number one, tax loss harvesting. Traders want to lock in capital losses before December 31st. They sell positions that are down to offset gains from earlier in the year. That creates selling pressure right around Christmas. Number two, profit taking. People want cash for the holidays, travel, gifts, expenses. If you are up on Bitcoin, late December is when you sell. No, Number 3, low liquidity. Trading volume always drops during the holidays. Professional traders are on vacation. Institutional desks shut down. Less liquidity means any selling has a bigger impact on price. Number 4, year-end rebalancing. Institutional portfolios rebalance before December 31st. If Bitcoin had a big run earlier in the year, funds trim positions to stay within their allocation targets. All four factors hit at once late December. That's why the pattern is so consistent. Christmas 2025. So what about this Christmas? We saw the 2024 dump. Bitcoin dropped 5.9% from December 25th to January 1st, right on schedule. But here's what's interesting about this year. Bitcoin had just hit a new all-time high above $106,000 back in December. So there was massive profit taking pressure. People who bought either $30,000 or $40,000 are sitting on 200 to 300% gains. That's when you lock in profits. Plus, the Fed just turned more hawkish in December. They they signaled fewer rate cuts in 2025, macro headwinds, so the 2024 Christmas dump makes perfect sense. What to watch? Looking ahead to early 2025, here's what matters. First, institutional demand. Spot Bitcoin ETFs saw massive inflows in 2024. If those flows continue in January, Bitcoin bounces back fast. It flows dry up, the dump continues. Second, global liquidity. The Fed's rate cuts in 2024 added liquidity to the system. But if the Fed pauses cuts in 2025, liquidity tightens. Less liquidity is bad for Bitcoin. Third, corporate treasuries. MicroStrategy, Marathon Digital, and other companies keep accumulating Bitcoin. If they keep buying through early 2025, that provides a price floor. If they pause, more downside. The pattern repeats. Here's the thing about patterns, they work until they don't. 4 out of 5 years, the Christmas dump happened, but 2020 showed us the exception. When Bitcoin is in a strong bull market, breaking to new highs with massive institutional buying, the pattern breaks. The momentum of overpowers the seasonal weakness. But in most years, when Bitcoin's consolidating or correcting or just trading sideways, the Christmas dump is real, minus 4.8% on average. That's not huge, but it's consistent. And, it, and in crypto, consistency matters. The takeaway, the here's here's the takeaway. If you're holding Bitcoin going into Christmas, understand the pattern. 80% of the time in recent years, Bitcoin dumps, tax loss harvesting, profit taking, low liquidity, year end rebalancing. All four factors hit at once. But if Bitcoin is in a strong bull run, like 2020, the pattern can break. That's when you get the exception. For most people, this data means one simple thing. Don't panic if Bitcoin dips during Christmas week. It's happened 4 years in a row, and every single time Bitcoin recovered in January. The seasonal weakness passes, volume comes back, institutional buyers return, and Bitcoin continues its trend. Understanding these patterns is how you stop making emotional decisions. Most people see a Christmas dump and think, oh no, bear market. But if you know it's a seasonal pattern, you stay calm. You wait for January and you let the pattern play out. Closing. Quick question. Do you hold through the Christmas period or do you take profits and buy back in early January? Drop your strategy in the comments. Data doesn't lie. 5 years, 4 dumps, one massive pump. The Christmas pattern is real, but knowing when it breaks is what separates profitable traders from everyone else. I'll be tracking Bitcoin's price action through early 2025 and breaking down what the data tells us. See you in the next one.